In today's episode, we're diving into a topic that's on the minds of many Canadians right now: mortgage renewals. With 1.2 million mortgages up for renewal this year, homeowners across the country are feeling the pressure, especially as they brace for potential increases in interest rates. This is a significant issue, given that 85% of these mortgages were originally contracted when the Bank of Canada's interest rate was at or below 1%. One homeowner, Dave Steele, is among those playing the waiting game with his mortgage. He's hoping that interest rates will drop before he has to renew in August. His current rate is in the low twos, and like many others, he's concerned that he won't get such a favorable rate again. Steele typically opts for a 5-year fixed rate but is now considering a shorter-term option, reflecting a broader trend among Canadians who are adjusting their strategies in response to the fluctuating rates. This shift toward shorter-term and variable-rate mortgages is echoed by Halifax-based mortgage broker Clinton Wilkins, who notes that the 3-year fixed rate has become one of the most popular options. Wilkins points out that the renewal landscape is looking more optimistic compared to 2024, thanks to several rate decreases already implemented by the Bank of Canada. The Bank of Canada's key overnight interest rate, which stood at 5% last year, has steadily dropped to 3.25% as of June. Many, like Steele, are betting on further drops, potentially bringing rates back down to around 1%. Wilkins advises homeowners to seek guidance from mortgage professionals to navigate these changes effectively. As we approach the end of January, all eyes are on the Bank of Canada as it prepares to revisit the key interest rate. Whether rates will continue to drop remains uncertain, but the hope for many Canadians is that they will see some relief in the near future. Let's shift our focus to the Greater Toronto Area, where condo buyers are finding themselves in a more favorable position as we head into 2025. According to Jason Mercer, the chief market analyst at the Toronto Regional Real Estate Board, a significant increase in new condo listings throughout 2024 has given buyers more negotiating power. This rise in inventory has outpaced sales, providing an advantage that is expected to continue into the first half of this year. In an interview with BNN Bloomberg, Mercer explained that first-time buyers, in particular, are set to benefit from this trend, coupled with downward trending borrowing costs. The Toronto Regional Real Estate Board's recent data release highlighted a 2.6% increase in overall home sales last year, alongside a notable 16.4% rise in new listings. Despite this influx of listings, the average selling price for all home types declined by less than 1% compared to 2023, settling at $1,117,600. Mercer attributed the easing financial pressures and increased buyer activity in the latter months of 2024 to the Bank of Canada's interest rate cuts. He mentioned that while there was an uptick in activity during the fourth quarter, many buyers are still holding off, anticipating further rate reductions from the Bank of Canada, potentially in the range of 100 to 150 basis points. Interestingly, while condo inventory is on the rise, the single-family home market remains tighter with fewer properties available. Mercer cautioned against slowing efforts to increase housing supply in the GTA, emphasizing the need for continued focus on housing development. He remarked, "It's important not to take the foot off the gas. Right now, we can talk about an elevated level of listings in the marketplace, but by and large, we're going to continue to see strong population growth in the GTA." Mercer concluded by noting that the current standing inventory will eventually be absorbed and stressed the importance of maintaining a robust pipeline of supply to meet future demand. This insight highlights the dynamic nature of the GTA real estate market and the importance of strategic planning to accommodate ongoing population growth. Real estate agents and experts in the National Capital Region are reporting a positive end to 2024 for the Ottawa-Gatineau housing market. After experiencing a slowdown in the previous year, the market is now showing signs of consumer confidence and stability. This upswing has been largely attributed to lower interest rates, which have helped to spur sales. However, there are still concerns regarding potential public service cuts and threats of tariffs from the United States, which could impact the local economy. Paul Chan, the president of the Ottawa Real Estate Board, highlighted a notable 11.8% increase in sales throughout 2024 compared to the previous year. He mentioned that this growth indicates a recovery and an increase in consumer confidence as more individuals are entering the market and pursuing home ownership. Zan also noted that the reduction in interest rates, alongside federal changes to mortgage rules, is making homeownership more accessible for some, though challenges remain for seniors and first-time buyers. Despite the positive trends, Zan warned that political and economic instability could hinder the construction of new housing, thereby affecting affordability. He described Ottawa as a seller's market where supply struggles to meet demand, causing many homes to sell close to their listing prices. During the peak of the COVID-19 pandemic in 2021, homes were selling in about 7 days on average. Now, that number has increased to a median of 20 days on the market, which is still relatively quick. The median price for a home in Ottawa, encompassing all types of builds, stood at $630,000 in 2024. In the Outway region of Western Quebec, Roch Saint-Jacques, president of the Outway Realty Board, described the market as experiencing a perfect storm. The median house price in this area reached $475,000, which is about $20,000 less than the peak during the pandemic. Saint-Jacques attributed this intense market activity to a tight supply and buyers' focus on falling interest rates, which creates a sense of urgency among purchasers. Francis Cortellino, an economist at the Canadian Mortgage and Housing Corporation and lead analyst for the National Capital Region, observed an increase in sales activity on both sides of the Ottawa River. Some buyers took advantage of high interest rates to avoid even higher listing prices, opting for variable rate mortgages to reduce their monthly payments. Cortellino cautioned that uncertainties surrounding American politics and public sector employment could temper the strong housing market activity in the region. He noted that compared to a decade or two ago, the economy in Ottawa-Gatineau is more diversified, with more individuals employed in growing sectors. This diversification provides some resilience, although uncertainties remain for some people, while for others, life continues as usual. A remarkable real estate transaction has made headlines in Mississauga, Ontario, with a waterfront property setting a new record for the highest price ever paid for a Lake Ontario property in the area. The home, located at 928 Linrod Court, was sold in late fall of 2024 by listing agent Philip Rouse and co-listing agent Peter Papusek of the Papusek team. Although the exact sale price remains undisclosed, the property was listed at nearly $20 million, specifically $19,999,850. The sale of this 7-bedroom, 12-bathroom estate comes shortly after another high-profile transaction, where the St. George Mansion on Dolton Drive sold for $17 million. These transactions underscore a notable trend in Mississauga's luxury real estate market, which has seen a significant boost. According to a recent report by Re/Max, luxury property sales increased by $3 million in the last quarter of 2024, marking a 40% rise compared to the previous year. The Linrod Court property, set in the Lorne Park neighborhood, is described as an extremely rare find in the Greater Toronto area, notably due to its expansive land and waterfront location. It boasts approximately 1.2 acres with nearly 300 feet of lake frontage, offering unparalleled privacy and views. Philip Rouse highlighted the unique shape of the land, which ensures that from the waterfront, homeowners only see the expansive waters of Lake Ontario, without any neighboring properties in sight. The home itself is a luxurious 2-story structure completed in 2023, featuring an array of high-end amenities. These include an indoor pool, a home theater, a bar, and a wine cellar. The property also includes a keypad entry, double gates, a 10-car driveway, and a 4-car garage. With 13,168 square feet of living space, the home is designed for both comfort and opulence, catering to the tastes of those seeking an extraordinary lifestyle. Interestingly, this property was sold off-market, meaning it wasn't listed on public real estate websites. The Papusek team, known for their expertise in luxury and off-market deals, collaborated with property influencers to create a compelling 20-minute video that attracted significant attention. The video garnered over 40,000 views on social media, eventually capturing the interest of the buyer. Philip Rouse emphasized that this sale highlights the potential and allure of Mississauga's luxury housing market. While neighborhoods like Rosedale and the Bridle Path in Toronto often dominate discussions of luxury real estate, This transaction showcases Mississauga's own capacity to offer spectacular properties. As Rouse aptly put it, this is a testament to how amazing Mississauga is and how amazing it can be. Today, we're turning our attention to a significant development in the Canadian lending landscape, the completion of the merger between Home Trust Company and Fairstone Bank of Canada. This merger, initially announced in March of last year, has now been finalized, marking a major consolidation in the financial sector. The merger brings together two prominent entities in the lending industry, with Yousry Bissada, previously the Chief Executive Officer of Home Trust, stepping into the role of Vice Chair of the Board of Directors for the new entity. Meanwhile, Scott Wood from Fairstone will assume the position of Chief Executive Officer of the combined group. Stephen Smith, who is the owner of both Fairstone and Home Trust's parent company, Home Capital, will chair the Board of Directors. This strategic move by Smith Financial, which acquired Home Capital back in 2023, aims to integrate over 2 million customers and 250 branches across Canada. The merger is expected to significantly enhance service offerings, providing a comprehensive suite of financial products including residential and commercial mortgages, guaranteed investment certificates, consumer deposits, credit cards, retail financing, automobile financing, as well as personal and digital loans. The newly formed entity will cater to over 4,700 mortgage brokers throughout the country, boasting combined assets under management of approximately $30 billion. According to a report by the Globe and Mail last year, the merger is valued at an estimated $5 to $6 billion. This merger is poised to create a formidable player in the Canadian financial market, leveraging the strengths of both organizations to deliver expanded services and reach. Stephen Smith, who also serves as the executive chairman and co-founder of First National Financial Corporation and holds a director position at Canada Guarantee Mortgage Insurance Company, is recognized as the largest shareholder in Equitable Bank. His influence and strategic direction are expected to guide the new entity towards achieving its ambitious goals. In our final segment today, we're spotlighting a noteworthy development in Ontario's real estate financing scene. Kennedy Funding, a direct private lender based in Englewood, has announced the closing of a substantial $1.883 million land loan to Axe Lake Resort Incorporated in Ontario, Canada. This marks the second loan closed by Kennedy Funding within just a week, underscoring their robust capabilities in the lending market. Kennedy Funding is well known for its expertise in handling loans that many other United States lenders shy away from, particularly those involving international laws and regulations. This latest deal with Axe Lake Resort is a testament to their ability to navigate these complexities successfully. The funds will be used to acquire 124.74 acres of undeveloped land across two parcels in the McMurrick/Monteith Township, part of the picturesque Almaguin Highlands in northern Ontario. The development plan for Axe Lake Resort includes a proposed 21-lot subdivision for single-family homes on a 74.74-acre parcel, which is the third phase of the project. An additional 50 acres are earmarked for the sixth phase, highlighting the potential for growth and expansion in this tranquil region. McMurrick/Monteith Township, with a population of less than 1,000, is a popular destination for outdoor activities like hunting, snowmobiling, hiking, and boating. Kevin Wolfer, President and CEO of Kennedy Funding, remarked on the challenges of closing international land loans, emphasizing the significance of this achievement. Wolfer noted, "Closing challenging loans is nothing new for Kennedy Funding, but closing 2 loans in a week is noteworthy and a testament to our ability to find ways to say yes to borrowers." This sentiment was echoed by Edwin Urego, Executive Loan Officer at Kennedy Funding, who highlighted their focus on assessing deals based on the merits and vision of the borrower rather than turning away potential clients. The Axe Lake Resort development is set to enhance the appeal of Ontario's natural beauty, drawing more visitors to the area. With the resort situated adjacent to Axe Lake, a favored spot for warm water fishing, the development promises to open up new opportunities for tourism and local economic growth. Urego expressed optimism about the project's impact, stating, "The new development will open this beautiful area to more visitors who want to appreciate the natural beauty that Ontario has to offer." This concludes today's episode of the Ontario Mortgage and Real Estate Insights podcast. Thanks for tuning in to another episode. We hope you found today's insights valuable as you navigate the world of mortgages and real estate. Before you go, a quick reminder. Real Approved is here to make your mortgage journey smoother. Whether you're buying your first home or refinancing, their experienced team is ready to guide you with personalized support every step of the way. Visit realapproved.ca to get started and take the next step toward achieving your homeownership goals. Catch you next time, and stay informed with the latest industry insights.